Hi, I'm Brian Arcese, Portfolio Manager on the Foord Global Equity Fund and Foord International Fund, with an update on the Foord International Fund for the first quarter of 2022. The fund returned 6%, outperforming global bourses in what turned out to be an even more volatile quarter than the last. Global equities, which declined 5%, posted moves in excess of 8% no fewer than 3 times during the quarter, finishing the quarter with positive momentum. In typical sell the rumor, buy the news fashion, markets began the year weak, with investors concerned about the steady buildup of Russian troops along the Ukrainian border, accelerating inflation, and the impending liftoff of the U.S. federal funds rate. This fear was relatively short-lived, however, despite all 3 scenarios coming to fruition. Global markets bottomed within days of Russia's incursion into Ukraine, inflation remains untamed, and Federal Reserve officials' forecasts foretell 7 additional rate hikes expected this year. Outweighing all was investor optimism around the further reopening of global economies as COVID-19 further transitions from pandemic to endemic. Contributing positively to fund performance were investments within and allocation to the materials and healthcare sectors. Key contributors within the materials sector were FMC, a global leader in crop science and crop protection products, and Freeport-McMoRan, a global copper miner. Shares of global agricultural chemicals firms rose following an increase in the expected demand for agricultural fertilizers and crop protection products as a result of Russia's invasion of Ukraine. Russia was previously the world's top fertilizer exporter, while current economic sanctions now make sourcing product outside Russia imperative. Further, as Russia and Ukraine account for 1/3 of global wheat production combined, it is essential to world food supply that crops in other grain-producing regions are maximized. Within the healthcare sector, fund holding Bayer contributed the most to fund returns. Bayer, a global leader in not only pharmaceuticals, but also in crop science, saw its shares rise on the back of the rising agricultural commodity prices. Weighing on performance this quarter were fund holdings in the consumer staples sector. Key detractors within the sector including global leading packaged food manufacturer Nestlé. Shares of Nestlé declined as the company navigates a surge in input costs that has squeezed margins. Management has begun to implement price increases thoughtfully in an effort to protect margins without materially weighing on growth. During the quarter, the fund's North American investments led regional returns, given previously mentioned FMC and Freeport-McMoRan. Asian and European holdings, including Alibaba Group and Nestlé, detracted. During the quarter, the fund celebrated its 25th anniversary, having been incepted in March 1997. Since inception, the fund's objective has been to achieve long-term inflation-beating U.S. dollar returns while minimizing investment risk. Our conservative investment nature has not only protected capital meaningfully through the many challenging periods over the past 2.5 decades, but has also grown capital considerably. Returns of the fund have grown at an annualized rate of 6.8% over the 25-year period, meaningfully ahead of inflation and ahead of the peer group. We look forward to investing our clients' capital with the same level of stewardship and success over the next 2.5 decades and beyond.